Hi, good morning, everyone. Welcome to our Philips Securities morning call for today. For stock count updates, we have initiation for Zixing as well as Pacific Radiance. We also have Philip on the ground for 17 Live and Aztec, uh, followed by the usual technical analysis and macro sector outlook for US software as well as Singapore Weekly. So, this is our usual disclaimer. The information is only for educational purposes and should not be considered as financial advice. Yeah. So without further ado, I'll hand over the time to Ambrish to get us started on the US software update. Thanks.
Thank you, Zain, and good morning, everyone. So last week we had released a quarterly update report on the US software sector with the title Generative AI isn't boosting the top line yet. Next slide, please. Thank you. So basically, we have divided the US software companies into four categories based on their functions, and the total overall sector revenue, it grew by about 13% on a year-over-year basis in the second quarter. And this was a slight moderation as compared to the first quarter. 2024. So basically, the main growth drivers is the Microsoft's 15% year-over-year revenue growth rate, which was mainly fueled by a robust demand for its cloud applications like Office 365 and Azure platform. So we continue to expect that Azure should continue to grow by about 30 plus percentage in the September ended quarter as well. And this is mainly because of as the companies continue to shift their workloads from on-premise to the cloud, as they leverage on the AI capabilities. Meanwhile, for Adobe, the Adobe's revenue growth rate, it has been more or less stable at about 10% over the last 8 quarters or so. And the main growth drivers for Adobe is the continued demand for its photo editing and video editing applications like Photoshop and Premiere Pro, as well as its the document solutions like Acrobat PDF Reader, as well as the e-signature capabilities as the workflows they shift digital. And the market had high expectations from Adobe with respect to its revenue AI contribution from its generative AI solutions, but the stock, it has dropped significantly this month after the company had reported its second quarter results. And so it dropped mainly because of the weak sales outlook. So it now forecasts revenue growth rate to drop from about 11% to about 9% in the September ended quarter. And so this basically suggests that there is still no significant contribution from its generative AI features. And as since the company is focusing on increasing its number of users, increasing the engagement instead of monetization. So in terms of Zoom, so it has the revenue growth rate for Zoom, it has significantly dropped after post-pandemic, and it's currently growing at about low single-digit range. And this is mainly because of increased competition from other players like Teams, as well as more as people shift to more in-person meetings. So this has impacted its growth rate. So moving on to the CRM segment. So the two companies that we have considered are Salesforce and HubSpot. And these two companies, they basically provide or enhance the customer, enable companies to provide enhance the customer relationships, and they provide a holistic view of the customer data so that it can boost its sales and marketing operations. So Salesforce, it basically focuses on large enterprises, whereas HubSpot focuses on small and medium businesses. But as compared to the overall software companies, there has been weakness in the CRM companies, like the revenue growth rate for Salesforce, it has significantly dropped from about like 25 plus percentage in industry, like it predicts 7% revenue growth rate. So macro headwinds, it's impacting its, and the company has highlighted that it's witnessing delayed sales cycle, as well as additional layers of deal approvals and deal size compressions. So this has been impacting the revenue growth rate for CRM companies. Next slide, please. So moving on to the ERP segment, the two players are Oracle and SAP, and for both of these companies, they have been traditionally focused on on-premise license sales, but it has right now been trending weak, and this is mainly because the companies, they have migrated their ERP softwares or workloads from on-premise to cloud, and so that they can access it they can access it from anywhere, and they also get enhanced security and performance capabilities. So as a result, like Oracle's cloud revenue, it has been grown by about 21% on in the June ended quarter, and this is mainly because of like 45% growth in its cloud infrastructure revenue and 10% growth in its software as a service application, which is Fusion Cloud. So it's basically a ERP software or database management software which helps companies with their accounting or supply chain or inventories management. So this particular category, it grew by about 10% for Oracle, and similar to Oracle, SAP's revenue, cloud revenue, it has also been growing significantly. Like it grew by about 25% in the most recent quarter. And we expect this trend for ERP companies to continue, mainly because of migration from on-premise to the clouds. And in terms of cybersecurity spending, it has been strong, mainly because of rise in number of online threats. And if we look at CrowdStrike's revenue growth rate, it has grown by about 30+%, but it forecasts its revenue to drop to about 25% in the September ended quarter. And we believe that this is mainly because of its the faulty software update that it had done in July. So it had impacted about 8 million Microsoft Windows devices. And we believe that this global outage issue, it might have impacted its or delayed its deals, and as a result, it's forecasting a revenue growth rate of about 25%. But management over the call, it had highlighted that most of the deals are still in the pipeline, and there should not be a significant impact to its top line, mainly because of the high switching costs. Whereas a Palo Alto Network, it's more broad or diverse in terms of cybersecurity solutions. It's into like it's providing firewall services as well as cloud security, and it's also into the endpoint devices protections. So for Palo Alto Network, it's expecting an acceleration in the September ended quarter. And we believe that this is mainly because of its platformatization strategy, which basically it's instead of selling a single product, it's focusing into providing more bundled solutions which can increase its average selling price. And so overall, for the US software sector, for the September ended quarter, we expect the revenue growth rate to drop slightly by about 12% range. And we like stocks like Microsoft and Oracle, mainly because they would still be the key growth contributors, mainly because of the increased cloud related spending infrastructure, as well as a shift from on-premise to the clouds. So that's all for me. I would now like to pass it on to Meow Meow. Thank you.
Thank you, Ambrish. So we initiated coverage on Zixing. Next slide, please. It was a buy recommendation and DCF back target price of $0.05. Some background about the company. Zixing Group is a Chinese sweet potato focused operator with a presence across the entire value chain, from cultivation to processed food production and R&D, such as the fermentation solutions. Yeah, so the main production base is located in Liancheng Country, Fujian Province, China. And Zixing adopts an asset-light approach. They list about 200,000 square meters of the land to cultivate their own sweet potato seedling, which they have provided agricultural cooperatives for planting and selling. They also contract about 5 million square meters of the farmland to these cooperatives. And Zixing gives farmers free seedlings and teaches them how to cultivate. And in return, farmers will sell the sweet potato back to Zixing at a pre-agreed price, which is lower than the market price. And Zixing pays an upfront fee every 5 years. Zixing works closely with a lot of third parties. This partner handles services like washing, sorting, cold storage, packaging, and even logistics and distribution. So all of which helps Zixing to cut cost. And the most important reason why we initiate Zixing is we expect PetMe to at least double, reaching RMB 30.9 million in FY25, driven by higher fresh sweet potato sales volume, new manufacturing facility for higher margin functional products, and also introduction of animal feed. The next slide, please. Yeah, so we identify 3 investment merits. Firstly is the growing supply of sweet potato. Zixing serves primarily to its B2B client, including some national brands like Three Squirrel for processed sweet potato products, and also supermarkets for fresh products. Extreme weathers in China's major sweet potato producing province disrupted supply this year. And the government is also supporting the industry to boost food security by allocating lands and offering rental-free periods, cold storage facility, etc. Yeah, so production capacity for the processed sweet potato will double by 2025. FY25 with plans to expand into higher marginal functional products. We expect gross margin to improve by 2% year-on-year to 34%. And as a result, we expect Zixing's net profit to increase by 130% year-on-year to 30.9 million. And for the midterm revenue catalyst, Zixing is expanding its revenue stream to converting agricultural waste, like the stem and leaves, into raw material for animal feeds. As China aims to reduce soybean content in feed from 40.5% to 13% by 2025, soybean demand dropped to 9.1 million tons in 2023. And sweet potato is a key substitute. And Zixing, as one of the China's largest producer and manufacturer of this kind of animal feed at scale, with proprietary probiotic formula, they aim to reduce hormone use, thus to enhance food security. So with animal feed consumption at 476 million tons in 2023, we expect RMB around 0.15 million in gross profit from this segment in fourth quarter 25, and also around RMB 1.7 million in terms of gross profit in FY26. Next slide, please. And for the long-term growth, Zixing is expanding its industrial network in participating some government projects in Hainan and also Henan province. They are partnering with the second largest company in China, CITIC Construction, to duplicate their value chain in Longyan country to other provinces, such as Hainan. So we expect production to more than double upon completion of this project. Yeah, so here are some photos of our site visiting to Longyan. Yeah, so these are their farms and also the warehouse. Yeah, so the photo in the middle is their packaging. And on the right-hand side is some sweet potato, samples. Next slide, please. Yeah, so some risk we would like to highlight. First one is income risk. Zixing operates in a very volatile business where weathers and other external factors will have significant impact on the production. Adverse weather conditions such as excessive rainfall can disrupt crop yield. Yeah, the second one is currency conversion risk. The group doesn't distribute any dividend at this moment, but if a dividend policy is implemented, the dividend will be subject to currency conversion rate between RMB and SGD, since the group generates profit in RMB and need to convert back to Singapore dollar for distribution. And also, they are subject to political risk. So the favorable subsidies and government support is a key catalyst for Zixing, and is susceptible to changing government or shifting policy direction. Last but not least, they have geopolitical risk. Zixing is expanding overseas, mainly focusing on entering into Southeast Asia market. However, with the escalation of trade tension, many countries are imposing tariff on Chinese export products, which is likely to increase the cost of goods sold. Yeah, next slide, please. Yeah, so some photos from our site visiting. This is their R&D lab. So Zixing is moving into introducing more higher margin functional products like the sweet potato cosmetics, and also some functional products like the product to help you to lose weight or boost collagen. Yeah, on the right-hand side is the cold storage facility they introduced this year to lower the spoilage rate. Yeah, next slide, please. So moving on to 17Life, it's all Philip on the ground. Next slide, please. So operating revenue for first half 24 missed our estimates and fall 33% year-on-year to 101.1 million due to decreasing MAU, monthly active user. And net income for first half 24 was US 1.9 million, missing our expectation. The decline was primarily due to some one-off expense, like the marketing expense in first quarter 24, which compressed the operating margin further to 1.3%. It decreased by 7.3% year-on-year. And there wouldn't be any major expense on marketing from second half 24 onwards. And for WeLivers, revenue from WeLiver live streaming tripled in first half 24 to 4.8 million, thanks to the onboarding of more streamers incentivized by the low-cost WeLiver skins. 17Life is also developing additional revenue streams, like its IP incubator, which selects and grows intellectual properties to expand into other areas, like the events and also merchandise. So operating metrics for WeLiver streaming looks healthy at this point of time, with MAU and paying ratio on the upward trajectory. And we expect revenue from WeLiver to double year-on-year to 9.5 million in FY24. With this growth rate continue for the next 2 years as infrastructure such as VR and awareness improves. And for WeLivers, revenue from WeLiver streaming decreased by 36.7% year-on-year, despite the effort of enhanced user retention rates. We view the correction phase as an inevitable step for 17Life to eliminate some of its non-performing streamers and also business units and protect themselves, protect its margin by distancing itself from the price war initiated by the Chinese competitors. MAU has already bottomed out in second quarter 24 after declining for 2 years. Thanks to the effort of such as streamer training on engaging in quality conversation with users and community building to improve their user loyalty and also retention rate. While ARPPU and the paying ratio remain strong, we expect upward trend in MAU to continue in second half 24, thus improve the top line. And for e-commerce, 17Life is seeking alternative revenue stream. They recently launched cross-border e-commerce platform called Hands Up Cross Border. This aims to connect Japanese products. They have over 90 stores with more than 1,300 streamers from Taiwan and Southeast Asia. So 17Life will earn a subscription fee and also have a cut on various parts of the supply chain, such as shipping, warehousing, and FX translation. So other revenue, including e-commerce, increased by 15% year-on-year in first half 24. And we expect the trend to continue, driven by growing demand for cross-border e-commerce in Taiwan and Southeast Asia. So language barrier between Taiwanese and Japanese market make Japanese products less accessible for typical online shoppers. So 17Life, its new initiative are well positioned to bridge the gap with a target of 30% year-on-year increment in the segment in FY24. And for outlook, we anticipate a turnaround in second half 24 as operating metrics such as MAU and retention rate has bottomed out. Various initiatives, including streamers training to improve techniques and average streaming time, are expected to contribute to this positive trend. Improvements has started in second quarter 24. Second quarter 24 operating income was 3.5 million versus a negative 2.1 million in first quarter 24 due to ongoing cost-cutting effort and also improving operating metrics. We expect 12 million saving in R&D and also the the full effect is expected to kick in from second half 24 onwards, which should improve operating margin to around 5% in FY24. So to look deeper into how they improve MAU, we have a 2-hour training session with 17Live. Yeah, so here are some photos. So the training aims to increase the paying ratio and also enhance the customer stickiness. Yeah, this has been done mainly through to improve the streamer performance itself, such as the how to adjust the filter, how to adjust your makeup, and how to come up with more engaging and creative contents and your own profiles. Yeah, for example, they have taught me how to build up my own profile by giving a shorter name and adding emoji to attract attention, and also put a short description on my profile to establish personal connection. Like my personal goals to achieve how many followers by the end of this month. And for example, I'm a new streamer. I'm more than happy to meet new friends on the platform. Yeah, so they also shared techniques such as streaming more than 2 hours per session to increase the payout ratio. Yeah, so since the streamer need to establish some connection and get familiar with their customers in order to let them pay. In the end. And the most popular content, instead of singing and dancing on TikTok, on 17Live, the most popular content is chit chat. And for new streamers, how they initiate a conversation is they have various campaigns. For example, some campaigns like should you and your girlfriend go dash on the first date? Yeah, so the streamers can stream under such campaign. Yeah, and naturally you can get the ball rolling by initiate conversations under such campaign. And you can also let your customer to pay to vote for the choices they selected. Yeah, so there are many other different trainings, and each streamer has been assigned to an agent. Like they can provide personalized and customized trainings for those in need. Yeah, that's all for me. I'll hand over to Eben for EasyTech. Thank you.
Thank you, Mel. Now I'll be presenting Philip on the ground for Aztec Global. Next slide, please. Okay, so Aztec Global is a company which manufactures and distributes LED lighting, IoT, and smart home products. For example, your smart switch and motion sensors. We did a facility tour to Pasir Gudang in Johor, Malaysia. And this is one of their 2 manufacturing facilities still operating. The other one is in China, Dongguan. In first half 2024, they have 3 new products launched, and they have 5 upcoming by year end. For context, currently under their flagship brand, Kaila, they have around 16 products. And during the facility visit, we visited their plastic production section within the facility, and we saw that yes, slowly started production, and it will slowly ramp up to take in more products from customers. So how these plastic injection products work is that they will inject molten plastic into a mold, and then the plastic will cool down into their desired shape. So this can be used in various kind of products, maybe electronics, LED, or IoT, which has synergy with their current core business. They have also implemented the Manufacturing Execution System, MES, which helps them to improve efficiency. How this improve efficiency is because when the PO comes in, the information will go straight into the Oracle system, and the Oracle system will send instructions straight to the production line. So they can receive information such as how many units they should produce, what kind of specifications, and what kind of yield to expect. And this will improve the general connection from when the PO is received down to the production line. And secondly, they also have a new automated line being tested, and this should start being implemented in 2 to 3 months. And eventually, this should replace 60% of labor, which we think will also help them in their cost cuttings. As for revenue-wise, revenue slightly declined year on year, as you can see in the top row of the table itself for first half 2024. And we think that this may be because of a decline in the order book. As you can see in the bottom right chart, the x-axis itself is labeled quarter on quarter, and there is a declining trend currently. Current order book is $304 million in July 2024, and majority of it will last till this year end. Dividends wise, it is 5 cents per share for interim dividends this year. And for context, the last year, for the whole of last year, it was 8 cents per share. And currently, this interim dividends of 5 cents per share is higher than first half of 2023. Dividends wise, same dividends is consistently above 50% dividend payout for the past 3 years since 2021. And this is because they have a very healthy net cash position of $274 million. As for our outlook, we see that there may be a slight decline in year-on-year in revenue because of the decreasing order book trend. However, because of their improved processes such as the MES as well as the automated lines, we think that this can bring in higher net profit for them. And because they have a very healthy net cash position, we think that this will also give them a lot of flexibility in deciding whether to give dividends back to shareholders or further invest into their business. Because during the facility tour, they have also talked about improving their sales team, such as giving them more trainings and as well as increasing the size of the team. And this may also eventually increase their order book. Yeah. Thanks. That's all from my end. I'll hand over the time now to Zain.
Thanks, Silvan. I'll move on to the technicals. So first up, taking a look at S&P 500. Last week it was quite sideways, but then we continue to see a new high being formed, with price breaking above the 5,733 horizontal resistance. So should the momentum continue this week, I think we are likely to continue to see new highs this week as well, with immediate resistance at 5,760 to 5,850 area, while the support is likely to be at 5,670 to 5,730 area. Then next up, we published a report for looking at the SPDR STI ETF leaders and laggards since 2007. So Singapore market has had a commendable performance this year. It's up about 10.2% year to date. Best return in 7 years since 2017, where it posted about 18% gains. However, the STI ETF is still 8.7% below its all-time high of $3.98, formed in October 2007. So we actually looked at the performance of the ETF holdings since the previous all-time high, and we actually documented down the absolute price returns in this table, shown here below. Yeah. So some of our findings is that 19 of the 30 component stocks have actually generated positive price returns since then. However, the top 5 laggards are CICT, SIA, DFI, CDL, as well as Citron. One sector that outperformed the rest was the banking sector, with DBS up 122%. OCBC was up 73%, and UOB was up 47%. In terms of the top 3 best performing REITs, they were Mapletree Industrial Trust, up 117%, Mapletree Pan-Asia Commercial Trust up 68%, and Fraser Centrepoint Trust up 51%. And some of the other notable outperformance, which had over 90% gains, was Jiangzijiang Shipbuilding and Thai Beverage. And in terms of some of the counters that made new all-time high this year, were the 3 local banks, as well as Jiangzijiang Shipbuilding and ST Engineering. Yeah. And next up, we had a technical buy for this iShares Core Hang Seng Index ETF. So it was at $69.20, take profit level 73.20 as well as 75.30. The stop loss at 65.80. The last close was 76.90 on Friday. So looking at the chart, there was a inverse head and shoulders formation building up, and then increasing momentum of bullish crossover on the MACD, and subsequently the price rallied to hit these 2 take profit levels. Next up, we have a technical buy stop for Dell at $118.44, take profit levels $128 and $137. Stop loss at $112. Last close was $120.22 on Friday. So looking at this chart, there was a breakout of an inverse head and shoulders formation out of the neckline resistance at $117 after forming a higher low support at $104, which was a resistance back in start of August this year. Coupled with the increasing momentum, we expect price to rebound further to hit these two take profit levels, which were previous resistances. The next one, we have also a technical buy stop for First Solar at $245.53. Take profit levels at $265 and $285 respectively. Stop loss at $234. The last close was $255.75 on Friday. So in terms of the chart, it's quite similar to Dell. There was a breakout of an inverse head and shoulders formation above a neckline resistance of $241. This was after forming a build-up of higher lows at the resistance, which is a bullish signal. And with the increasing momentum currently, we expect price to hit towards these two take profit levels, which were prior resistances as well. Yeah. So this table just summarizes the 3 trades initiated. For the Hang Seng Index ETF, it hit our second take profit level, so it's up about 8.8%. Dell is currently, the trade is still in progress, currently up 1.5%. As for First Solar, it's also in progress, up about 4.1%. So that's all from me. I'll hand over the time to Paul to talk about Pacific Radiance. Thanks.
Yeah, thanks, Zin. So we initiated Pacific Radiance on Friday. Next slide. Pacific Radiance is not new. They're around for, I think, many years. They got listed more than 10 years ago. But like all oil and gas operators, they were hit by the downturn and they had to undergo a major debt restructuring. So if you look at the fourth bullet point on the left, they had in 2022 they completed almost $600 million debt restructuring. Around 200 million was debt forgiveness. Another 200 million plus was actually the disposal of 33 vessels, and the balance was still some outstanding, and some of it was actually converted to shares. But even conversion, I think the cost of those shares is probably like 50-60 cents. The current business right now is they have 3 ship management. So what happened is that when they sold the 33 vessels that they owned previously to a private equity fund, the fund had no expertise, but they wanted it to still be managed by Pacific Radiance, of course, which has the track record. So that is part of the business. Then they also have a ship repair and construction yard in Singapore, Pandan. And the third business is now the one that's going to drive the growth is ship chartering of offshore vessel. They have another fourth business, I guess. This is their Indonesian listed associate, which they totally written off, so it's not in the books, but they still have a stake. That business owns like 41 OSVs or vessels in Indonesia. So we initiate with a buy and a target price of 6 cents. So the 3 main growth drivers, they're probably making this year they're making maybe 2 or 3 million. Next year we think they can hit at least 7 million US. So what's happening is that what happens, they did a rights issue, a 23 million rights issue. For that, they actually reactivated 3 vessels rather than buy new, because probably one vessel probably can cost them maybe 15-20 million. They reactivated 3 vessels, and with that, 2 of the vessels, they already announced a $41 million contract in the Middle East. So that will be the main driver of earnings in 2025. They also have 4 CTVs. So CTVs are basically crew transfer vehicles. So basically, they are like vehicles to help transfer maybe a 5-6 man crew to the wind farm for maintenance and installation. So in Taiwan, there's a massive rollout of wind farms, something similar to what Marco Polo is doing. So they have 4, but the earnings will be less because they are smaller, and also because they have a 49% stake due to cabotage rules. But they may generate income from interest income through this entity. The next growth driver for them is the shipyard. So they're going to build 2 CTVs in the Singapore yard, and we estimate the value is about 10 million. The CTVs could be either for their own use, because the demand is strong in Taiwan, or alternatively, they could just sell it. The third driver we think will be the turnaround in Logindo, their Indonesian associate. For that, they restructured the debt too, but the thing now is that for the oil vessels, most of them are in Indonesia, but where the charter rates are actually quite low. So what they plan to do is either sell them or move them to international waters for higher charter rates. Now, post-rights issue, the stock is probably like 2-3 times EV/EBITDA. 40% to discount to book, and probably 30-40% of the market cap is in cash. Next slide. So these are the vessels. The one on the top left is the old vessels, but the 3 will be activated in the second half. They'll contribute some earnings in the second half, but most of it will come in FY25. So as you can see, 3 OCVs activated in 20 half, and so one of them workboat, HTS, and accommodation barge. We think this is just the beginning. I think as the balance sheet has become stronger, they will probably be activating even more vessels in the following year. Next slide. So we move on. So this is just to show you that they have operations globally. So this is not just a new startup. Even though they had the major debt restructuring, they do have operations or offices in Mexico, Middle East, and of course Asia, and recently Taiwan. The one that will drive earnings for them will be the ship chartering, the blue one, and also the shipyard. The ship management is stable. They manage about 30 vessels. It will grow incrementally, but to scale up, you need at least 100 to kind of contribute meaningfully. So that will take some time. But of course, this is an asset-light and fee income generating business. Next slide. This is my final slide. Just so to pack some valuations, we took the industry about 8 times. The closest comparable is probably Marco Polo. Because Marco Polo has a shipyard and they also are OSV operator, that means the offshore support vessel operator. The other one is Penguin, but Penguin is mainly a yacht. They also build CTVs. Valiance is also another offshore support vessel operator. That means they operate the vessels rather than just build. So for Pacific, is they build and they also operate. The largest operator is probably Tidewater in the US. With I think 200 over ships. Okay, I think next slide. Move on to the usual Singapore Weekly. Next slide. So in terms of some of the data points coming up from Singapore, we had industrial production. We're beginning to see some momentum pick up for Singapore in terms of exports and also production. You can see here 21 is a big jump. Although year to date is only 2, there was this massive jump in electronics, but we kind of think it's a bit of an anomaly because last year they think it dropped 20%. So it's still recovering, but we just find it a bit strange because the numbers just was the base effect, or the base year 23 was actually extremely weak, although no reason was given. We also had some population numbers. So this is important because population will also drive GDP growth in Singapore. So we had about 119,000 increase in population to 6 million. It's half the level last year, but of course last year was a record 281,000. But it's still double the pre-pandemic average, about 47,000. No, the 2019, the 5 year before the pre-pandemic. Residents, the number of residents, which I guess is a more important number, is roughly flat, about 32,000 a year, similar to pre-pandemic. In the US, we had the core PCE, not CPI, the core PCE inflation. It's generally in line with expectations. I think so. It's within, because it's rounding error, like 2.6, 2.7, so it's around within the expectations. The other thing that we monitor is savings rate, just to see how robust or the health of the US consumer. They are still under saving. I think they used to save 7%, now it's 5%. But consumption is still pretty stable, strong in the US because the auto sales is up about 7%. The fastest growth in 6 months. Again, this is just to get a flavor of what's going on. So there's like no collapse, no real risk of any recession and so far, especially if you have 7% auto sales. Next slide. So I'll move on to our tactical views. I think it's our tactical views, which we publish every Monday in our morning note. So for this time, it's all about China. So we all heard the news of the Chinese central bank cutting rates, cutting mortgage rates. But I guess the other more important thing is there was a Politburo meeting, the CCP's, the government's Politburo meeting. This usually meets 3 times a year. It's usually April, May, and December, but this felt more like an emergency meeting by the government. And in this meeting, I mean, you can read it off from Xinhua Press, but the key things is that they want to provide necessary fiscal spending with special bonds. So what this means is that, as reported in the news, they are going to raise like almost $300 billion US of sovereign bonds and use that to kind of stimulate the economy. This is not my word. This is exact words from the meeting is a powerful lowering of interest rates. I think that's obvious. They also want to stabilize housing, but they want to stabilize with the existing stock. So I think they're very cautious not to build more, to stimulate the property market and build more residential housing. I think their focus is try to sell the existing stock. So what this implies, also don't expect strong commodity prices because they are not building, they're just selling the huge inventory that they have. And the other point they mentioned was a vigorously, this is not my word again, this vigorously guide funds into the stock market. So they want more to direct more funds into the stock market. The central government also, the central bank also open funding lines direct to them. So a stockbroker can virtually borrow money from the central bank by asset collateralization. So the second bullet point is more, let's take it with the sense of jest. So of course, we just thought that it's like almost Xi Jinping kind of read the SGX chairman statement. Now, as you all know, there's a review of SGX and how to improve it. So if you read the letter, I think the chairman aptly put it, no, that if you don't support our market, no, why should we expect others to do so? So our comment just that even the communist understands that no, it's important to stimulate the stock market. We hope others do too. So in the near term, we think it's unlikely any change in fundamentals in the near term. Because all this will take time. I think the transmission to the real economy will be through the wealth effect, through better, I guess, the equity market and better home prices. And of course, the key one is the fiscal stimulus, which will only come later, won't be so soon. But for us, we think the main way to play China, I mean, from our vantage point, is the consumption. Not so much investment, because that is the direction the country, directionally, that's where they want to push, which is more consumption. But we think the rally could move still a little bit, but we're a bit more wary as we come closer to the US elections, because we still take the view that there'll probably be some global de-risking of equity markets, maybe a risk-off scenario as we come closer to the elections, because as you are a US investor, you're not sure which policy, because it's still a neck-to-neck race between Kamala and Trump. So for us, I think in our model portfolio, as we are playing consumption, what we like is travel, which is China Aviation Oil, consumer through CapitaLand investment and asset values, because CapitaLand manage a lot of real estate funds and they also own malls in China. So that is the main driver. And like Myanmar mentioned, the recently initiated, which is a play on food security and also consumer in China. Below are some of the key events happening. The main one will be on Friday, the US payrolls. So this is an important number because any major deviation from the estimate of 144,000 will determine whether the Fed's going to cut 25 or the Fed's going to cut 50 basis points. On Friday morning, we will have our usual Singapore quarterly strategy, and then the following week we have a US strategy. It's open to everyone. Feel free to dial in if you have the time. Next slide. Okay, this is just illustration. I'm not going to move anything, but I guess the population is now growing at 2%. It's above the pre-pandemic, or that's slightly below 1%. This is, I guess, good for the GDP. This is just the number of the resident, because resident is, I guess, a more stable number. It's a more permanent population. So just to show the numbers in blue chart. This is the so-called white paper that we had in 2013. We had the high case and low case of where the population will be by, I think, 2030. So even then, we're still below. We are probably hitting the trajectory of 6.5 million by 2030. Next slide. Then, okay, this is the inflation. This is the important inflation number, the red line. So if you trend line the current month-on-month movement, we could hit the Fed's target of 2% by March of 2025. So this is important because what it means is it gives room for the Federal Reserve to cut rates. If the red line were to spike back up, then we're all in trouble, because then there's no unlikely for them to, it doesn't give them any reason, doesn't give them any headway towards cutting rates. So that's why the red line is very important for us to monitor, which is inflation. This is nothing much. This is to show that the health of the consumer is okay, but isn't that great because they are under saving. Next slide. Then the next, I think the final point is that, like the title suggests, I think they're just trying to preempt a balance sheet recession. The famous Richard Koo book. What it means is that even though interest rates are at record lows in China, you can see on the left, the either households or businesses are deleveraging. So even though rates are coming down because of the, you can call it pessimism or stretched balance sheets, they're all paying down their debt even though interest rates are so low. The one on the right is just to show the trajectory of the interest rates. So the red line is the reserve ratio requirement. So this is basically money that any commercial bank puts in the central bank, which is virtually redundant money because you put there, you can't earn much, but you just have to leave it there. So by lowering it, the money can then flow into loans. So that's one way to think about it. The red line is basically if the commercial banks want to borrow from the central bank, they can borrow at 2%. And the blue line at the very top just means the lending rate that they lend to their prime customers or the best customer, which is about around 3%. So it just shows that interest rates are trending down to very low levels as the policy suggests. Okay, I think that's it for me. I think we can move on to Q&A.
Yeah, thanks, Paul. Yeah, I'll take a few questions. There's a question here, any impact of Google filing antitrust complaint against Microsoft? Yeah, so likely not really that significant impact. It's quite ironic because what Google is alleging is that Microsoft is making it very difficult for its customers to that use their productivity softwares like 365 and so on to switch away from using Microsoft Azure. It's quite ironic because Google essentially does very similar practices with its Android and some of its other products as well. But in terms of any financial impact, probably not really. It's just a complaint that they filed in Europe. I think the landscape in Europe especially is very receptive to a lot of these antitrust complaints. If anything, there could be some minor business model changes for Microsoft, but I don't think anything that's significant. So another one here, any impact on the DOJ investigation on SAP price fixing? Yeah, so the backstory to this is that SAP actually allegedly colluded with another company to basically charge the US government higher prices for its services. Apparently this investigation had been going on for the last 2 years or so. Obviously the stock sold off quite significantly, and I would assume that any I guess implications, if they really did price fix, would really be a headwind for the stock. Yeah. I'm sorry, I couldn't really give a much better answer than that. But likely, given that it seems to be quite a clear-cut a lawsuit from the DOJ, most likely they're probably going to be found guilty. That's just my opinion. Yeah, I got a few more questions here on Tesla. Sorry, so okay, sorry, there's one more here on semicons. Hi, Jonathan. China urged local companies to stay away from NVIDIA chips. Any impact from this? So likely very minimal. I think NVIDIA already saw quite a significant impact from chip ban towards the end of last year. So the likelihood is that they've already been impacted very significantly because they weren't able to export a lot of their newer Hopper as well as Blackwell. Won't be able to export their future Blackwell chips to China, and this is really makes up the bulk of revenue. So any other negative impact from Chinese companies not buying, likely be very minimal. Hi Jonathan, any insights we can take away from Micron's results? Why did the stock pop so much? Yeah, so Micron actually had a really good set of results. I believe both their top line and bottom line were above consensus estimates. Essentially, they doubled their revenue year that was their fiscal fourth quarter 2024, which I mean the stock was expected to do well, or rather Micron was expected to do well given the significant demand, especially from AI demanding a lot of their high bandwidth memory. But I guess as like most other semicons, as expectations were really high, Micron was able to exceed all of it and more. That's really what led to such a significant increase in the stock price. At the same time, guidance for the first quarter, fiscal year 2025, is also above expectations. The company also mentioning that they expect about $25 billion in revenue coming from HBM for 2020, fiscal year 2025. So all in all, a good set of results, and also commentary for this coming fiscal year, which will end next year, also very positive. That's I guess most of the reasons why stocks doing really well compared to some of the other semicons. Then there's a couple of questions here on Tesla. Hi, Jonathan. Will rate cuts boost Tesla significantly? I think maybe not so much that significantly. Obviously it'd be great because if financing comes down, it's a little bit more affordable. But I think that the key reason why Tesla has been doing so poorly is really outside of India. It's not really. It's really outside of the US. It's more a China story rather than anything that's happening in the US, and that's largely where the rate cuts have been happening, or even in, for that matter. Any expectations for Tesla's upcoming delivery and robotaxi event? Yeah, so I think they're going to be announcing the robotaxi event will be on the 10th of October. I think deliveries should be slightly earlier than that. Expectations for third quarter deliveries to be up about 6% year on year, which is quite a positive. In the first half of this year, they were down about 7% comparing to the first half of last year. So demand has been fairly weak. Over the last couple of months, we've seen some stronger signs coming out of China, at least on the delivery end. And so that's kind of why I think the expectation is for deliveries to grow a little bit in the third quarter. In terms of the robotaxi event, I guess we'll have to wait and see. I don't think it'll be anything groundbreaking. This was already delayed from 2 months ago. But likely it'll just be outlining the timeline for actual, I guess, robotaxi enrollment. Yeah, I guess we're a bit skeptical on robotaxi, at least in the near term. I mean, in terms of technology, it's great, but I think in terms of utility wise, we're probably still in very early days. But yeah, like most other events, it'd be good to take a listen to see, whether the rollout. I think most investors would likely be more focused on when Tesla expects this to actually contribute significantly to revenue or to growth. The downside for a lot of these events, especially for Tesla, is that they're always whatever they promise is always delayed by a few quarters or a year at least. So I guess you gotta take it with a pinch of salt. Yeah, but all things considered, delivery is supposed to be pretty good. Robotaxi event, another positive, even though that's probably 3 to 5 years down the line. Yeah, so I think that's probably all for me. I hand it back to the rest of my colleagues. Thank you.
Thanks, John. Yeah, maybe I'll just take a couple of questions. I think there are two. The main ones being, what's the outlook on the 3 local banks, being DBS, UOB, and OCBC. Yep. So I think the fundamentals have been unchanged. So what we're looking at least for the net interest margins and the net interest income, is to hold stable, going into the rest of the year, as well as mostly into next year. I think there are several reasons for this. Firstly, the net interest margins will not increase, but we feel that they may not decrease lower as much, because the Singapore banks, they're all doing the same thing, which is to move a lot of their excess deposits and funds into this longer tenure interest earning assets. So they might not earn as high of a spread if they were to lend it out, but at least they're able to lock in these rates for up to, I think, 3 to 4 years was what was mentioned. And secondly, something that will sort of sustain their net interest income will be the recovery in loans growth. We have already seen it, according to the MAS statistics last month. In June and July, we have seen that the loans growth have reached a new 21-month high.
right? And this is even before the rate cuts have kicked in. So once the rates have lowered, that we could possibly see it reaching even higher. I think it was around 2% the last time that they released their loans growth statistics. So we could see it probably even hitting, mid-single digit. But of course, we are still looking and expecting for it to be coming in at around a low single digit for the full year of FY24, right? So that's one, that's the net interest income and net interest margin segment, which we expect to be quite flat. And secondly, what will be driving their growth and what will be giving them boost to their earnings would be the fee income segment. So fee income has been on this sustained growth for the last couple of quarters, growing at double digit, mainly from the wealth management income. So what we're seeing is that the investors and the customers are having more of a risk-on sentiment now, because a lot of their fixed deposits, they have the tenure is finished already, so now they have nowhere to put the money. They're not getting the high rates for their FDs like before, 4%, high 3%. So now they have to move it out into wealth management, fee income products. And this is where the banks are benefiting, because then they'll be earning a higher margin. The AUM has been continuing to grow, and I think it's mainly from this low yielding, low risk products previously when people put their money in. So the AUM has always been growing. But what was happening before was that the fee income didn't really move much. It moved a little bit because they're putting it into this very low yield products for the banks. But now they are switching from these low yield products to higher yielding products, which is why we are seeing their fee income actually growing at double digits. And it should be sustained further, because as interest rates start to drop and people are having more of a risk on sentiment, because now FDs are not really earning as much. Yeah, so that's the brief outlook for the Singapore banks, and we are expecting it that they will be able to sustain their dividend growth, their dividend yield, sorry, yeah, and their growth going into this year and as well into next year. So I think that's all for me. There's one more question about DBS valuation, still at $38.50. Yep, it's still maintained. Someone also asked what are the TPs. UOB is at $34.90, DBS at $38.50, and OCBC is at $15.40. Yeah, thanks. I'll hand it over to the rest of my colleagues. Thank you.
Hi, thanks, Glenn. I'll answer some products on Aztec. So I'll start off from this question. What are some products Aztec manufacture? So they manufacture, majority of their products are network products, telecoms product equipment, as well as smart home solutions equipment. So network products are, for example, they are your Wi-Fi routers, your security, and then your telecoms equipment and smart home solutions equipment are, for example, your security cameras. There's also wireless support and all those switches. So it's a lot of electronic kind of products. Yeah. And so who are their main customers, right? They mainly do B2B. So a lot of them, a lot of the products are manufactured for businesses. For example, US companies which deal with, for example, smart baby monitoring, kitchen scrap manufacture management, as well as health tech wearable. So a lot of their customers, majority of them come from North America. And it is not very explicitly stated publicly, but during our facility tour, I did talk to the managers on the ground, and they say a very big client of theirs is actually Amazon. So they manufacture a lot of these electronic products for Amazon, which probably explains why the majority of their customers come from North America. Yeah. And then next question is, who are their competitors? So it is also not explicitly stated publicly, but I did some search on companies which manufacture network and IoT devices. So some of their competitors may be TP-Link and D-Link. So these two companies manufacture Wi-Fi network devices. Second company is Netgear. They manufacture routers, storage devices, security cameras, and as well as Cisco. Cisco manufactures network and IoT products, for example, routers, wireless support, as well as switches, which these are the kind of products that Aztec manufactures under their flagship brand, Kyla. They also have a website for Kyla, which you all can search it up, which is KYLA. So those are the kind of products they will manufacture themselves. Last question for Aztec is any idea why they raise dividend payout? So Aztec's company policy is that they will try to give out 30% of dividend payout. And it increased from 54% in first half 23 to 83% in first half 24. So this is a very significant increase in first half 24. And actually during the facility tour, some analysts also asked why is there such a big increase? But the management didn't give a very explicit reason, but I feel that it may be because they have a lot of excess cash on hand. And 70% of their shares is also held by the Mann family, because this is a family business. So I feel that whether or not they give out dividend or not is based on whether their family needs the cash on hand or not. Yeah, so some analysts also feedback to the management that maybe the payout ratio should be more consistent so that it's easier for them to forecast. Yeah, but there's no set reason of why they actually raise the dividend payout. Yeah. So that's all from my end for now. I'll hand over to my colleagues. Thanks.
I'll take some questions. Oh, 17Life, is this the company that has tied up with Lendlease on later 313 Somerset extension? What is the plan for the extension involvement? Yeah, it's not the company that tie up with Somerset. Also, you're referring to Live Nation, I believe. Yeah, so they'll be mainly hosting concert in Grange Road. So they are called multifunctional event space. Yeah, so it's expected to be in operation by first half 25. Yeah, hope it answers your question. And what is the main competitor for Zixing? Currently there's no major competitor for Zixing in China. Yeah, because like they have a very unique business model. So they're basically present in all of the entire value chain of sweet potatoes. Yeah, so they rent the land and cultivate their own seedling. Yeah, to increase the production. Since the current technology in China is very much lagging behind US and Japan. So after they cultivate the seedling, they'll sell it to the farmers for sweet potato cultivation. And after harvesting, the good quality sweet potato will be sold as the fresh sweet potato to the supermarket, and the less presentable one will be manufactured into the processed sweet potato products. And currently they have 180 more products. And for the pure agricultural waste, like the leaves, will be converted into animal feeds. And they already signed contract with the customers, and revenue will be kicking in from fourth quarter onwards this year. Yeah, so because like they really have a very confined value chain, so there's no major competitors in China. The next one, how does 17Life retain streamers? Yeah, so the streamers turnover ratio in the industry is very high. Yeah, but for 17Life, the same like 20/80 rule apply for 17Life. The top 20 streamers contribute to around like 80% of the revenue. And how they retain the top streamer is firstly they have exclusive contract with the top streamers. So if they break the bond, of course, like they'll pay a certain there will be like certain penalty. And 17Life they also have the highest paying ratio compared to all its competitors. So their paying ratio is more than 16%. They have a lot of the mechanism for to help their streamers to monetize. For example, you need to pay to get into their community, and you need to pay more to get into another more niche community. Like, and during the streaming, like customers need to pay to guard the streamers. And also like so that you can ban like other people from texting, also like ban other people from like entering into the room. Yeah, so basically they have like very wide variety of the mechanism to help streamers to make money. Yeah, that's why streamers are very satisfied with the platform. And also, Once Alive has various offline marketing events, like the offline marketing campaigns to build up streamers' reputation. Like they really collaborate with the celebrities in Japan for the offline events. Yeah, so in this way, like streamers can be motivated through both the monetary way and non-monetary ways. Yeah, hope it answers your question. And what is the drivers for WeLiver? Also for WeLivers, currently the main market is still in Japan, and yeah, no doubt the main driver is the Japanese manga culture. Yeah, so Japanese they just love the animated figures instead of like the real person streaming in front of you. And originally, one animated skin for WeLiver used to cost like 1,000 to 2,000 US dollar, and it takes like weeks to generate. But now with the updated technology, so the skin is like very much for free and almost instant to generate. Yeah, so this attract a lot of the new streamers to onboard. Yeah, subsequently, there will be more MAU. And 17Life usually has small trading volume and queues. Can share your view on that? Will that continue? And was a period with surge in volume, but this has died down for a month now. Yeah, so 17Life, their free floating share is around 20%. Yeah. And all of the insti investors has been holding their shares. Yeah, so that's why the trading volume has been very small. And the rally last month was pretty much because like post result, yeah, we believe the market took the result positively and expect more improvements from second half 24 and even onwards. And the volume died down recently, probably because like the positive points has already pressed in. And we are expecting more news in the second half of 24, such as the acquisition and more collaborations with e-commerce segment in Southeast Asia. Yeah, hope it answers your question. I'll pass my time to rest of my colleagues. Thank you.
Yeah. I see one question only. Yeah, sorry for let me just take on one. Your view on hospitality REITs. Yeah, so for hospitality REITs, we are still quite bullish on hospitality REITs, mainly because in Singapore, even though the RevPAR over the past 2 months, we see the RevPAR coming down a little bit, but the visitor arrivals has not reached pre-COVID levels, so that's expected to return by next year. And with that, the hotel occupancy will also increase. And that is a component of the how RevPAR is calculated with average daily room rate stabilizing and slightly improving hotel occupancy. We expect improving RevPAR going forward in the mid-single digit levels. Yeah, so we think there's still room for growth for hospitality REITs. And of course, the interest rate cuts will benefit all REITs as well. Yeah. Comments on Mapletree Industrial Trust, but this still got by to current price. Let me see the share price. Yeah, so the Mapletree, the Industrial Trust also has rallied recently by about 10% in line with a lot of the other REITs. But Mapletree Industrial Trust, let me see. Yeah, for them, we are expecting the rental reversals to slow also to mid single digit levels. And the issue is that they have some vacancies in their US data centers. So that is likely to improve as some of these vacancies get occupied. Yeah, and they also have a target to increase or rather double their data center AUM in 5 years. Yeah, so yeah, in REITs in general, we are still very bullish because of the interest rate cuts. We think next year REITs it'll be easier for them to generate DPU year-on-year growth. So roughly in general, we are still bullish on all the REITs, most of the REITs. Yeah, so hope that answers. the question. And what do you, Paul? Thanks.
Yeah, thanks, Darren. So I'll try and answer as many as we can because just like 40 over. Okay, is there any upside for capital infrastructure REIT trust? It's not a REIT, it's a trust, a business trust, or just keep it for dividend yield? I think best case is just keep it for dividend yield. I think because there was a huge placement done at almost 44 cents, I think. Yeah, so I'm actually surprised the share price is still holding because there was such a huge placement. We don't really have a strong view on capital infrastructure. Yeah, we don't really follow them very closely, but yeah, but I think there's probably downside risk. I mean, if they just did such a huge placement. And it's a good time to accumulate Pan United and view the massive construction project, Terminal 5, expansion of the 2 eras by next year. Yeah, I think we think so. It's going to be another record. I think it'll be even a record year next year. Like you mentioned, the Terminal 5 and also the 2 IRs, which combined, I think we highlighted before, each spending about 7-8 billion. Each casino is spending 7-8 billion. So we think the contracts could probably peak in the next 1 to 2 years. So we think there's still more growth ahead. And Pan United has 40% market share. Yeah, and why it's different right now, probably less known, is that the government is funding a lot of this off balance sheet. They're using this infrastructure bonds that you can like do some amortization or just pay the interest first or amortize the debt. So that's why they can be more aggressive on infrastructure spending because there's a funding route through the Singa bonds, you call it. Yeah. Manulife, I think I leave it to Darren. Now, what's your view on IX Biopharma? No change. I think it's. We'll try and ask them to do a webinar if they're ready. I think after they lost CLOS, it's back to square one again for them. They are still doing. They're still doing new discovery work on their. They're still looking to commercialize some of their wafer-min products. Yeah. So I think no real change for them. What's your view and outlook of food? I think this year would be a tough year. I think for Food Empire, leave it for Zane for the technicals. But I guess Food Empire this year, with the impact from the higher coffee prices, I think coffee prices, it'll probably take them 2 to 3 quarters to adjust back. But this is not new to Food Empire. Food Empire has experienced such a jump in raw material costs. Just that you'll come with a lag at the next 2 to 3 months, 2 to 3 quarters before you see margins recover. Hi Paul, Marco Polo, Kim Hing, Valiance, Mermaid in the similar business and specific regions. Marco Polo in particular, because they are a yacht and they operate offshore support vehicles. When I say OSVs, I'm referring to your AHTS, accommodation barge. Basically, these are vehicles that help, when people are installing wind farms, when they are installing a rig, you need all these vessels to support this installation or this kind of maintenance. Valiance is actually one of the biggest OSV operators. I'm not sure why they're loss-making. They're one of the biggest in the Middle East. Mermaid Maritime is more commissioning and decommissioning. So they are more services rather than OSV operator. OSV operator, you think, it's like I don't know, a bus operator or a vehicle operator if you want to put it in very layman terms. But Mermaid, they do the work. They actually do the decommissioning and commissioning of old rigs. So there's a slight difference there. So Sheng Siong acquired real estate property. Your comments, I think it's definitely a positive because for Sheng Siong, for those who don't know, I mean, they acquired. I think it's all over the news. They acquired 2 sites previously. I think it's Cold Storage Fresh. But regardless, I think it's positive. Number one, because they are expanding their footprint, their storefront. They have 60 plus, close to 70. So these 2 stores will add up. The bottleneck has always been new stores. Not so much lack of demand because there's always the ability to get sites. And these are large sites that they like. So that's a positive. The other thing is that it's just another sign that Sheng Siong is gaining market share without stating the obvious here. Because your big competitor is exiting, and not yet exiting, they're selling their stores to you. So it's a very clear sign that Sheng Siong is gaining share, not just from operators like Cold Storage, but also they're not, as usual, they're taking market share from the wet markets, especially for fresh food. So it's not only just the organic growth, but there's also market share growth. Okay, I kind of lost the okay, there's quite a lot. Okay, sorry, give me a second. I'm just trying to get back to the okay. The next one is, do you still like CSE Global after the 8 million litigation payoff? What's the impact on? I think investors generally, or at least analysts, rightly or wrongly, we will, like a Google settlement. Everyone will just take it and just write it off as a one-off expense. It won't. There will be a knee-jerk reaction, but I think that you've seen DBS, right? So DBS has got so many penalties, ATM disruption, payment disruption, but the share price still go up. So all this, the market will just take it as a one-off. Most important is there's nothing major permanent. Not like Google, there's a breakup and so on and so forth. So we still consider it, or they kind of suspend them from operating. Then that is more serious. For us, we just take it as a one-off. So the impact will definitely be impact, but I think there'll be that's a short-term impact, and then the market will just move past this. Why does Zhangjiang financial price go up after China's stimulus? Do they lend to the property sector? Actually, they are de-risking, from my recollection, they're de-risking from China, but I guess it's just the for me, I think actually for financial, the earnings will still drop because they're taking out all their loans from China and moving it to Singapore, and that's going to take a long time before you get any earnings from that. Because you're putting into private equity funds, and by the time you close the fund, make a return, it take like 3-4 years. But I think it just removes the tail risk. I guess with all this funding, then maybe there's less risk of a bad debt and so forth. For me, it's more sentiment driven than anything in particular. Okay, I think I lost the track again. Hi Paul, can you share more about Pacific Radiance associate login? The associate is called Logindo, but totally written off. Is that negative asset? Yeah. So in accounting terms, when you own an associate, let's say you own an associate, the cost is let's say 20 million. I'll just pull a number, but the losses there exceed 20 million. Accounting wise, you have to write it off. So that's what we mean by writing it off. They still own the stake, but for accounting, you cannot lose more than your 20 million. So like a backstop. Likewise, if you make profit, you have to recover the 20 million before you can contribute. So that's what I mean, they wrote it off. So accounting in the balance sheet, you can't see it, but they still own it, just accounting wise, it's not on the balance sheet. How would you care Pacific Radiance with Marco Polo and Nam Chong? Okay, Nam Chong was a yacht operator in Malaysia. Shipyard. I think right now I haven't really followed recently, but they restructured, and I think they own a lot of vessels. That's all I can recall for Nam Chong. Yeah, sorry, I don't have it offhand for me. I need to look back again. Yeah. Okay. Do you think the China rally can sustain fundamentally? I think it can sustain in a very near term, but maybe in the next 1-2 weeks, my guess. But when we come into the elections, there's a clear and imminent threat. I mean, if Trump were to impose tariffs, then the market would gap down again. I think after this rally, what the market needs to see is the government really implementing fiscal measures. The best would be just do come cash handout, because I think some of the cities like Shanghai give cash handout. Although it's not big, but I think this will help. So I think to sustain, the market needs to see. I think market has been really, I wouldn't say tricked, but there was a premature rally when the post-pandemic reopening, but after that fizzled out because it didn't really improve the economy. So I think the market needs to see probably some follow through, but I think directionally it's quite clear. I think they want to backstop the downturn in the economy, which we think could be even worse next year. So you need some fiscal stimulus. Otherwise, the downturn we think will still happen in 2025. But what's the reason behind the surge of Genting trade last Friday? Is it sustainable? I think I don't see any news, but for us, we are a bit more wary of Genting, mainly because we are at probably the tail end of the spike in tourism, especially Chinese arrivals, but also because in in Thailand, they seem very serious on opening the 8 big casinos there. Even if they don't open, the news flow is going to pummel it's going to cause a lot of negative sentiment for the stock. So even you can just think of it at the headlines, or maybe the Thai government making more headway, pass legislation to open 8 casinos. Genting's not going to get hit. Whether they eventually become a casino like in Japan, they, after so long, still haven't built up anything. But I think the news flow might hurt the stock. I mean, that's the conclusion I get. Why does okay? I think I answered this. With the dragon waking up, do you think the REITs will focus on China exposure, other overseas exposure, Singapore exposure? Yeah, I think it will help sentiment, but we don't see any results. I don't think there'll be any impact. It's not like because of this, the Chinese consumer decide to spend more in Cecil REIT more. It will take time, I think, the real mechanism. That's why we prefer to play through CapitaLand. I think for us, it's CapitaLand investment rather than go direct. Because CapitaLand investment, they will still also benefit from lower interest rates in China and higher asset values. Of course, you still see it for some of the REITs, but for us, we're not so aggressive. Yeah, we don't think it will be a major fundamental turn. Yeah, in the economy. In the next few, this may be more impactful to cause some downside protection in the second half, because what has happened is only lower interest rates. The interest rate is already so low. Make the stock market more buoyant. Yeah, that will benefit a certain population. But I don't think that's going to help everyone start to go out and shop again. Yeah, there'll be some wealth effect, but it'll just take time. This is somewhat similar to the QE in the US, but it just take time. What's the key diverging for share price performance? Yangzijiang Shipbuilding, Yangzijiang Financial. Of course, Yangzijiang Financial is more domestic. Yangzijiang Shipbuilding, I think container rates, freight rates have been coming down, so that hurts them. And secondly, the weak US dollar clearly hurts them because they bill in US dollar and the US dollar just dropped like a rock. So that's going to hurt them too. And this share price has rallied, I think, almost 70% this year. So I think they're just prone to profit taking if there's any negative news. And this is the negative news, environment-wise. The container rates down. Do know that almost 70% of their new order books all come from container vessels. So if container freight rates were to start dropping even more, then I think the sentiment will be bigger. So I think that's the reason. I hope that helps. Okay. Hi, Paul. Was the China stimulus more than expected? Can we consider bazooka? Yeah, it was definitely more than expected because I wouldn't think bazooka, maybe AK-47. Because why is more expected? Because in the past they will every few months cut interest rates by 25 basis points, then wait few months. So it was very stop and go kind of situation. I mean, I guess not much different than our MRT, but stop and go. But I think this time round they seem to be the commitment is there, and I think they are willing to do more if the situation doesn't improve. I think they are like backstopping the thing. So it's not about what they have done now, but it's what they're going to do even more in the future. I think that's why the market is bullish. But I wouldn't call it a bazooka. Bazooka is they really do know that when the pandemic happened, China didn't really stimulate the economy. So I think that's why they're in this shape, not like the US, even Singapore. So right now, the best bazooka they do is really give outright cash handout to the consumers, which they're doing a little bit to the poor. But this could be a flavor of what they're going to do. That means outright cash handout. If they do that, then I think that's really the bazooka. Just put money in people's pocket. I mean, that's the best bazooka. But they haven't done that, but that will be the one that really will cause the big U-turn in the economy. This one will maybe stabilize it, not make it drop so much. I mean, this is just my own view. Please comment on DFI and Hong Kong fundamentally. I think Hong Kong land is definitely cheap. If you buy now, you are just playing on privatization. And you shouldn't be surprised if they do a privatization. I think Jardine has done 2 privatizations the last few years. So you're just buying for privatization. I don't think you're going to buy because there's going to be a turnaround in Hong Kong office. Hong Kong office occupancy just spiked up to a record high 9% vacancy in central Hong Kong. And it was just happened, so it's not going to suddenly drop back down. So you should expect the vacancy to be poor. If you go into Hong Kong land now, you're just hoping for privatization, and it's cheap, 0.2 times book. DFI, the DFI after selling Yong Hui, I think they cut out a loss making, and that's why there's a return. But I think they are in the consolidation phase. I think they're really, like what we mentioned in Sheng Siong, they're also kind of shifting, consolidating, which is good. I mean, they're restructuring. Anything they're loss making, they're cutting. So there's a structural story behind DFI because they are shedding some of the loss making. I think like selling Cold Storage to Sheng Siong. Basically, they put a white flag and then gave up, cannot fight with Sheng Siong, so they just sold it, which is a good thing to do. I mean, rather than keep on continue to lose money there. So I think probably both are look interesting for me. I think, but for different reasons. Yeah. Okay. Hi Paul. Any difference? Answer this. Then I'll pass it on to Darren. I think. Hi Paul. Any difference between OSV and CSOV? Yeah. So OSV is offshore support vessels, which is like your AHTS, your accommodation barge, which is like a hotel. AHTS, you can think of it like a vessel just to bring people, bring supplies and everything. The CSOV, that is my mistake earlier was for CSOV is to really to support, to bring people like 60, 100 people to do the maintenance work at the Taiwan. So for CTV, sorry, I made a mistake. It's not 5, 6 people, sorry, it's actually 24, 25 people. Because all these offshore wind farms that you see, may not be the best looking thing in the sea, but you need to do maintenance work. So you need to transport them. So the CTVs will bring them there. The CSOVs is like a larger version of the CTVs. But they can actually elevate, they are more stable. So you don't, so the people that jump on, they virtually, not, I think I wouldn't say jump, but they literally have to cross into these offshore rigs in very rough seas. But really CSOV, there's a lift, there's a ladder, there's a platform to cross. So it's like a high class elevator that can transfer safely the crew. And they can and they can of course stay on board too. So that's the difference. OSV is just a very generic term. CSOV is also considered like a OSV. Yeah. Sorry if I confuse everyone even more. Is Thai Beverage a good buy? Looks like a laggard. Okay, so Thai Beverage, it has been a laggard because the last few years it has been hit very badly. Of course, there's pandemic. Then in Vietnam, they got hit also by the weak export sector. Then they got hit again by this drunk driving rule in Vietnam. So after acquiring Vietnam, probably the timing wasn't the best idea. They got hit by so many. They got hit by COVID, hit by drunk driving rule, new laws, and then hit by a weak export sector. But the recovery we think will be again like highlighted on taxonomics. So I think if Thailand were to recover, they're going to do this big one-off spending, and if that happens, that could actually help improve Thailand, Thai Bev earnings. Yeah. Okay, I think I spoke enough. Then hand it over to the rest.
Yeah, let me try to take some. Yeah, so I was in the Manulife briefing earlier, so I didn't quite catch the questions that were posted earlier, but I'll just talk about the Manulife divestment of capital. What happened basically. So some things to take note. So first of all, they divested it at a sale of 117 million, and they intend to use all of the cash proceeds, because basically the buyer is all cash because of the lack of liquidity. So it's a full equity buyer. So they are basically going to collect the cash from proceeds and pay off all of the debt that expires in 2025. So they have 130 million of loans that are due in 2025, and about 110 after minusing all the acquisition costs and the divestment costs and such. So 110 million will be part of this 130, and the rest will be from their existing cash that's on the balance sheet. So they'll pay off this 130 million. That's one. And another point to take note is that this capital is actually not in their tranche 1 asset. So if you recall earlier, they classified some assets that are up for sale, then they prioritize it based on different tranches. So actually this capital is not inside of tranche 1 priority asset, is in the tranche 2. So there's another thing to take note. Another thing to take note is that this price or this setup price of 117 million. So that is based on the most recent valuation of done in September, and this is very far off, or rather about almost 30%, like 27-26% of the property valuation that was done in 31st December. So 31st December, the 2023, the price, or rather the valuation and of this asset was 158. So in the book value is 158, and basically they are divesting it at 117. So they are making some it is divesting way below the valuation. But all in all, overall, this after all is still a rather good deal because it's a step towards their net proceeds target of $328 million in divestment by June 2024. June 2025. So they have a 230 million target by December 2023. So with this about 117 million, so that brings them to about 47 or almost 50% or half of their target to reach for this year in divestments. Yeah, so post paying off the loans, basically Manulife's gearing will improve from 56% to 54%. So overall, this is just a good step. It's a stepping stone for them to as part of the distribution mandate and part of the recapitalization plan. So going forward, they still have to divest another about 130 million at least by December to avoid paying the penalty and to avoid paying the penalty for the June 2025 one, which is about 328 million target. Yeah, they have to divest about another 200 million more by then. Yeah, so that's just a quick update for Manulife US REIT. Yeah, I see one. MLT, any update on their China exposures issues? Yeah, so for MLT, I don't see any updates, but we do expect the China side to be weak with negative reversions going forward, like maybe 10% or around that low double-digit negative reversions for at least the next few quarters, because the Chinese the logistics space remains very, very weak. Yeah, so that is no change, but we will update once the third quarter results and you see if there are any positive signs from the market from their third quarter business. Or for them, not third quarter, for them is a first half results. Yeah, I think that's all I see. Perhaps I hand over time to Zain or my colleagues who want to answer more questions. Yeah, thanks.
Okay, thanks, Darren. I'll start with the TA. Let me just share my screen. Yeah, so I'll go through the Singapore and Hong Kong questions first, then followed by the US. Yeah. So first up is 9868 Hong Kong, which is XPeng. So for XPeng, I think currently the rally is actually retesting this previous support around $54. I think for now, I think the rally could still hit higher for since it still has a good momentum coming in. The next key resistance area I think is around $60 over here, which might pose more of a resistance than this $54 level. So for now, it still hit a bit higher depends on the momentum. And next one is on 579. Beijing Jingneng Clean Energy. Yeah. So for this, I think for now, it seems a bit of recovery. Price has managed to climb above this resistance of 192 to retest this resistance over here. The next level at around 204. So for now, we might see a bit of a consolidation, given that this was it was a key resistance 2 times previously. If you can hold a higher low, then it could still continue. It could still possibly continue to hit higher. Next resistance after this will probably be around somewhere closer to about 217 to about 220 area. And then next question is on CLI. Okay, for CLI, I think the rally could still hit higher. Recently, price did a bit of a consolidation over here. Recently, in a bit of a triangle formation over here. So there was a consolidation, and then we had a breakout again. So this was coincidentally a previous resistance area around 305 to about 310. So and then price cleared it today. So I think could still see the price go higher towards closer to about 330, which is the next key horizontal resistance for CLI. The next question is on Singapore Airlines, SIA. For SIA, I think the momentum still looks very good. It's a gradual uptrend over here. There was a bit of consolidation that took place recently. This between 655 to about 665 over here, and today it just broke out again above this resistance. So I think if you can hold above this 673 level, we could still see perhaps this further legs in this rally to close out the gap around 690 and to about $7 this resistance level. Okay, then the next question is on HST, which is the HS Tech ETF. So HST, I think currently very strong, ready to hit this a bit of resistance previously at close to 77 cents. 77 cents, and then to this 78 cents was the previous resistance over here. So we might see a bit of a pause if the momentum drops off over here. A bit of a compound thing. Maybe we could see a bit of a consolidation afterwards. Yes. So for now, as it stands, rally is still very strong. It's seeing very powerful kind of price movement going outwards towards resistance. The next question is on SRT. SRT is the IHS REIT ETF. So SRT, I think the uptrend is still moving up gradually. Price has still maintained above few resistance levels since the breakout over here at 77 cents, still holding above 80 cents level. This previous support level. So I think the uptrend over here should still move higher to actually go on to retest this next swing higher, closer to 85 cents. As long as we still see this recent swing low at 80 cents to hold up. Okay, then TA view on the three local banks. So first I'll talk about DBS. In terms of DBS, we've seen some pullback since last Tuesday. Currently a bit of a weakness as prices. You can see that previously this bullish movement over here, price movement was sustained above the 5 and 10-day short-term moving averages, but currently we are underneath it. The price is below it, so a bit of a slowdown in terms of momentum. Also, price is below $38, this previous resistance. So I think we might see it go pull back a little bit slightly further in the near term to retest this next level around 37.20. Then it might do a bit of a consolidation thereafter, given that this was previous sort of a range resistance breakout. So I'm expecting a bit of a consolidation between like 37.20 to about $38 for the near term for DBS. And for UOB, also quite similar. You can see price cutting below this 10-day average support, and as well as price is below $32.30. So I think for now it might go a little bit lower to retest a previous resistance over here closer to about 31.70 and trade sideways as well. Looking at OCBC is also similar. Price cut down the 10-day moving average. Also below this breakout level at $15.30. So for now, we might see some slight further pullback So next near-term support is around $14.90 to $15 area over here. So we might see a bit of a consolidation thereafter. Okay, then there's a question on Singtel as well. Singtel also a bit of a pullback recently. And see previously price was holding up very strongly above the 5-day average, but reversed last Monday. Currently is below 5, 10, and 20 as well. For now, I think we might see a bit of a consolidation once it gets to this support area, which was prior resistance. This is about 310 to about 320 area, should provide some support in the near term. I think price might consolidate for a while at this area. The near-term resistance is around 328 to about 332, this area over here. And then next one is China Aviation Oil. So I think China Aviation Oil, good thing is that it finally was able to break out this descending triangle formation. So for now, also cleared some resistance at 90 cents. I think for now it could hit a bit higher to retest some resistance around 93.5 cents to 94 cents area previously. This was like a double top. So that area might have some resistance. So maybe could rally a little bit higher. Positive if price can stay above 90 cents. This previous resistance, see whether it can act as a support next. Okay, then next question is on Bank of China. Okay, Bank of China, I think seeing some strength as well. Price broke above this blue downwards trendline resistance in blue. Currently is doing a bit of a retest. So as long as we can see price holding above 360, this resistance, this confluence of resistances, then I think it's still bullish for price to rebound and trade higher. So we need to see, let's see whether we can see some support coming at these levels or not. Okay, then next one is Silver Lake. I believe Silver Lake price movement is still around there, around 36 cents currently, a bit of a break below 37 cents. So I think maybe price could just consolidate in a bit of this lower range for the time being. Okay, next one is Q&M. So Q&M, I think for now still looks like in a range bound consolidation. Yeah, so I think nothing much for now. Resistance still around the 29 cents level, but good thing is that price is still forming higher lows along the way. So as long as this trend continues, there's still some possibility of a breakout in future. Yeah, but for now, still some consolidation in progress. Okay, the next question is on ComfortDelGro. Okay, for Comfort, I think price could hit a bit higher. This was because price did a bit of a consolidation recently between 147 to about 150. And then just end of last week, price is holding above this breakout level at 150. So with that, I think uptrend is still intact. We still see price hit a bit higher to possibly test this blue color trendline resistance, which could bring up price up to about maybe 155 level as a next resistance. Okay, then some more Hong Kong counters as well. First up is Baidu. Okay, Baidu, I think for now it managed to clear this resistance at 99 to $100 swing high. So with that, I think it's entering into this next resistance zone. I think we could still possibly see price go a little bit higher to test this about 110, 111 resistance next, which was a key horizontal resistance previously, and maybe some sideways thereafter. Still showing some strong momentum. I think there was some there's a lower wick today as well, so price managed to go back above the opening price after some pullback in the morning. The next one is JD. So JD is also very strong currently. JD and possibly next resistance is around the 183, 184 level over here. Prior there was a support level turned into resistance as well. So for now, it's testing the first level or another level at 165. If you can break through this, then I think possibly we could still see maybe test the next resistance over here. Given that momentum is still strong today as well. Next one is on Alibaba. Alibaba, I think it's still possible for it to rally a bit higher. So next key resistance is about 115, 116 period tested multiple times in the past. So I think this will be some key resistance where price could take a breather from. Next one is 2318 Ping An Insurance. Ping An Insurance and some next resistance levels around 54 to 55, then followed by about 57 to 58. So momentum is still very strong. I think could still possibly hit this next resistance levels. Then there's a question on Tencent. So Tencent, I think Tencent, I think it could still hit higher. There was quite a period of range consolidation that took place over here, then break out last week. So currently, next key resistance, based on previous data, was around 455 to 465 area. This was a previous quite a long range consolidation. So I think could still hit a bit higher to test this previous range resistance. And then next one is the 3067. Is Hang Seng Tech ETF. Okay, so for this Hang Seng Tech ETF currently is hitting it hit a previous swing high around $10 over here. If the momentum is able to sustain, I think we could still see maybe go towards higher levels. Next resistance is around about $10.80 to $11 next. And 2801, it's MICI China ETFs. For this, I think it's still quite positive because it managed to break above this previous resistance level around 2150 over here. Still holding above it last Friday. So I think with that, not much resistance at this area for now. I think we could still see a further rally towards about $24. Then there's some resistance ahead over here previously. And 2807, it's China Robotics and AI ETF. So for this, currently hit 47, bit of a resistance previously, but momentum is still very strong. I think over here, if can close at this level, I think still possibly hit a bit higher to test the next resistance around $50, which was this previous a bit of a head and shoulders pattern neckline previously at $50. And 3191, it's China Semicon ETF. For this, I think yeah, could still hit higher as well. 39 to 39 will probably be the next key resistance level for this counter. Okay, then next up, there's a question on Bitcoin. For Bitcoin, I think currently it's back to retest this downtrend channel resistance over here. It's around 65 to 66K area. I think for now a bit of a slight pullback, but let's see whether it's able to hold this previous resistance level at 64K over here, this upward support line as well. If it's able to hold and produce a bullish candle afterwards, then I think there's a chance of a breakout. Yeah. So let's see how it goes at this key juncture. And then I'll do a bit of a TA for Food Empire. So Food Empire, yeah, price is still languishing currently. I think positive is that price is holding 96 cents still as a support, but we're still seeing a bit of a lower highs being formed recently along this downwards resistance line. What's that? $1.03 and $1.01, and currently $1 a bit of resistance. So still a bit of a weak price action going on, but I think we need to see price clear this $1 level, then I think we could see some recovery. If not, I think we just still be a bit of a consolidation currently between the current price and 96 cents as support. Okay, then there's a question on Mapletree Logistics Trust. Is it a good buy at the current price also for Yangzijiang Shipbuilding and OCBC? Okay, so first I'll take a look at Mapletree Logistics Trust. I think over here is likely doing a bit of a consolidation. With some support is around 143, 144, a bit of resistance at 149, 150. I think it's still a good buy. I think if I think we'll still get a bit of a support at this range, near the low end of this range. I think it could be doing a bit of a consolidation before heading higher. Yeah, because previously over here at 146 to 150, there's a bit of a resistance. So if you can clear this level next, I think it could head higher towards the next level at 156 to about 162. I think it's still a good buy at this range support area. Then for Yangzijiang Shipbuilding, I think for now we are seeing a bit of a weakness. Currently. Price because price actually broke down this 264, 265, this swing high. It held a bit as a support briefly before there was this large bearish candle on Friday. So I think for now, a good buy would perhaps, for now, if let's say at 245 over here, this support level, we're able to see a bit of a confirmation of support, then perhaps if you're interested, you could enter a bit. Unless I think we see a bit of but with this large bearish candle, I think there's some downside momentum for now. So I think a safer side would be that to actually wait out for maybe a bit of a bullish signal to come in, or stopping kind of candlestick. Then I think you could look to enter. Yeah. So I think maybe for now just kind of observe first. Then for OCBC, I think it could be a good buy once it retests. If it does retest this previous resistance around this $14.70 to $15 area over here, previous resistance. So a bit of a dip. If it does dip until there, I think it could present a good buy. Then some more TA on some Singapore counters. First up, Sembcorp Industries. Okay, Sembcorp I think is still maintaining the bullish trend over here. It just can see price is holding along the 5-day moving average. So that's a sign of a strong uptrend currently, and also it's still above this 537 previous horizontal resistance as well. I think we rarely could still head higher to retest this previous double top around 570 level. Then for Aztec Global, I think Aztec Global is still looking good. I think still seeing strong kind of price movement. Price actually retested this $1.02 swing high level after forming a series of higher highs and higher lows along this stretch. So for now, you might see a bit of a consolidation, but you can still maintain a higher low. I think there's still a possibility to take out this resistance again to trade higher. Next resistance above 102 should be around $1.06. $1.06 previously over here was previous resistance back in 2021. Okay, next one is on Keppel. Okay, Keppel Corp, I think it's still looking good as well. I think it's doing a bit of a consolidation currently between about 650 to 660. It's consolidating at this resistance level. So I think as long as you can continue to hold these lows, if there's a breakout that occurs after this range consolidation, I think it could still head higher to the next level at about 680 as the next resistance for Keppel. Okay, then let me see what the other counters is. Singtel, okay, Singtel went through earlier. Franken, I mean for Franken, I think it's looking better. So previously, last week it did a bit of a consolidation at prior support and resistance at this 133 level. Price is still managed to hold this stretch of higher lows over here. This stretch of higher lows. I think it's still this short term uptrend is still intact. As long as so as long as I can hold this 133, 134 prior resistance now holding as support, I think we could see maybe price continue inch higher towards about 142 to 144 this swing high next year. And G13 Genting Sing. Okay, for Genting Sing, I think we're seeing a bit of a price a bit of a bullish reversal currently. Yeah, price is forming higher lows, higher highs currently, holding support at this resistance, prior resistance of 83.5 cents, 84 cents level. And then today, these 2 days, we are seeing price moving higher again. So I think with that, it's likely we still see that we see price move higher to test the next resistance about 89 cents to about 91 cents. These are two next key resistance level here. Next up is iFast. So for iFast, I think looks like a bit of a double bottom and at 680 previously, and price is moving steadily upwards over here. A bit of just trending along an upward support line. So there, I think we could still possibly see price retest this about 640 swing high resistance over here. Then maybe it does a bit of consolidation thereafter. And then for Fraser Logistics and Commercial Trust, looks like a bit of a consolidation at the moment, but I think overall it's still the bullish trend is still intact because price is still holding this previous resistance at 112, 113 as a range support recently. So a bit of consolidation, if you can break above the resistance at 118, then I think you could still see the trend move high, the bullish trend move higher to test 122 to 124 ahead. Okay, next question is on SMIC. Okay, for SMIC, I think it's momentum is still good over here. It's entering a bit of a resistance zone next. This is around about 20 to 2130 area. So 2130, I think expect a bit of resistance coming over there, given it was a support resistance flip area previously. So for now, but if price can hold above 1980, this level, I think is still positive. So a bit of a rally currently, then we could still see price to test this resistance level next, before maybe a bit of a consolidation thereafter. Okay, then there's a question on BYD. BYD, I think is still strong as well. Holding is clear above this 276 resistance. So with that, I think next key resistance to watch out will probably be around 292 level, as well as about near the 309, 310 level. Yeah, so I think we could still see a bit of a rally upwards to test this next resistance at 292 next. Yeah, given the strong momentum currently. Okay, then next up for BYD Electronic. BYD Electronic, I think we see prices starting to do a bit of a reversal, clearing this resistance at $30 over here. So I think as long as this level holds, there's a bit of a back test today. As long as this level holds, I think we could see price go a little bit higher to the next resistance zone around $34.70 or $35 a few. Yeah, then I think in view of time, I'll take one last question on FCT. So for FCT, yeah, looking at the chart, I think looks like a bit of a consolidation at the moment. Price, the support is around 230 level and a bit of a resistance above 237, 238. So looks like some consolidation. I think for now, this bullish movement is still intact as long as price is still holding this 230 level. Yeah, then for you to regain some strength, it needs to clear this 238 again to try to break out this consolidation. So looks like still some sideways at the moment. Yeah, I think with that, I think I'll hand over time to my colleagues if there are any more questions to answer. Okay, I think mostly I think it's TA questions. So I think I'll just close today's session. I think thanks everyone for attending today's our weekly market outlook. And thank you for all your questions. Sorry, we are unable to answer all of them, but feel free to post your TA questions in our POEMS 3 community. I'll take it over there. And also feel free to join our webinars. Upcoming webinars, we have our Singapore strategy and stock picks coming up this Saturday morning, as well as our US one taking place next week as well. So hope to see you all again and have a good week ahead. Thanks everyone. Bye bye.